When staying ahead in your business game is your aim, making you ready for it is what we do here in Bisnomics. Welcome to your weekend's most profitable 60 minutes. This is Bisnomics. I'm Tarandu Amarasekara. Now, Sri Lanka has officially been declared as a bankrupt nation. What exactly does this mean? How bad does this really look like? And how did we get here? And most importantly, how do we get out of this mess? This will be our focus today in Bisnomics. And joining me for this very special discussion is none other than Mr. Ifthikar Wahid, who is an independent investment banking consultant who has provided consultancies and advices for governments and businesses around the globe. Ifthikar, absolute pleasure to host you and welcome to Bisnomics.
Pleasure to be with you, Taran.
Ms. Ifthikar, let's start with the main question that a lot of people are having. What exactly does it mean for a nation to go bankrupt? We saw that the Prime Minister said that we only have about $1 million available. We don't have enough money to pay for the international bonds which we have issued. And so many concerns have been raised. What exactly does it mean for a nation to go bankrupt? And most importantly, how did we end up in this mess?
All right. Bankrupt is a very strong word. I wouldn't like to use bankrupt because, we got into a position of insolvency where we were in a position where we didn't have the resources to service our debts. So, and rightly at a point when we couldn't service, we actually went into voluntary, in corporate terms, it's known as voluntary administration or liquidation, where you basically tell your debtors that we are not in a position to repay. We want to restructure and come up with a mechanism where we can get out of the problem. Now, how did we get there is because if you look back, 2 years ago, we had close to about $6 billion of reserves.
Correct. 7.5 if I'm not mistaken.
So, $6 to $7 billion of reserves. And we knew we were going to face a stressful time post-COVID. And mind you, before COVID, a year before COVID, we had already got into a stressful situation because of the Easter Sunday attack and our tourism revenues dwindling. So there itself, we had a hole in our inflows.
Correct.
And come COVID, and we basically completely, we ran out of export revenues dropped, tourism revenues dropped. And also, at that point in time, there were no investments coming in. So effectively, we had to use the reserves. So that at that point in time would have been the ideal time for us to map out a strategy and come up with a 5-year plan where you will transition out of the crisis. That we didn't do. We basically, now this is not, Sri Lanka is one of the countries who have faced this. There are other countries have faced much severe crisis, and they've got out of it. So you can get out of it,
correct,
but if you plan properly. Now at that particular point in time, there was a debate whether we should go to IMF or we should go to, my personal view is that we basically made a wrong policy move to go towards a home-built solution. Now, this home-built solution is not a tried and tested solution. It was purely based on theory.
Correct. The modern monetary theory, as they call it, printing money.
Exactly. So, which didn't work for us. And also, the question is that in a situation like that, where you have the whole country at stake, you have to basically go through a process where it has been tried, and all strategies don't succeed. Maybe some strategies would have failed in other countries, which are successful. So that's a call policymakers should have made at that particular point.
And we saw a lot of reluctance, even from the former central bank governor, saying, no, we don't have to go to the IMF, we don't have to go to the IMF. But invariably, we had to go to the IMF.
Yeah, no, the question is that if he had gone to the IMF
back then,
2 years ago, we would be coming out of the, we would have been coming out of the crisis situation by now, because the reason is that now
Because even in any sickness, sorry for interrupting, Mr. White, but even in a illness or sickness,
Yeah.
you spot it early, and if you start treating it early, you get out of it early with less pain.
Less pain, exactly. Now we have to go through the pain, because what happened, we waited till the last moment, till we ran out of reserves.
Reserves to pay for our
Yeah.
basic essentials.
There were couple of bad calls made at that particular point in time. One was the fixing of the exchange rate,
Yeah, expats stop sending their money.
and the other was the keeping interest rates very low.
Correct.
I mean, those two effectively contributed to us getting to this position, because at that particular point in time, if you had let the exchange rate float and pushed up interest rates in line with the market, because at that particular point in time, the LKR interest rates were below what the banks were paying for the US dollars. So effectively, you created a mechanism for exporters who are getting their proceeds to hang on to their dollars and borrow rupees. So if we had basically let the exchange rate float the exchange rate and kept the interest rates high, maybe we would have gone through some trouble, definitely, but not the amount of trouble we are going through right now.
Understood.
Because the market, the other important thing one has to remember is that you can't fight the market. You can't basically control the market and fight the market, because market forces will hit you hard. That's what actually happened to Sri Lanka, because we basically thought that we can keep the exchange rate, freeze the exchange rate, bring down interest rates, and also solve the problem, because the market forces react.
Correct. This is like, I think, one of the examples was that this is like trying to have, push your hand and keep a rubber ball under the water.
Yeah,
And
exactly.
you think you are keeping the rubber ball under the water, but no sooner you take your hand, it's going to come out and come back with a much bigger force.
Exactly.
So, Mr. Wahid, in terms of the tax reductions in 2019, we saw just after the president took office, there was an announcement that so many taxes were being reduced. What exactly were those tax reductions, and how bad is the impact of that? Because they say that we clearly lost billions of rupees due to that decision, and that's money that could have maybe been used to buy the dollars over a time period, and we won't be in this kind of a bad situation by now.
Yeah, no, okay. I'm not a person who, low taxes is a good policy.
Yes.
Right? But the question is that if you are going to reduce taxes, there has to be a basis based on which you're going to reduce taxes. One of the ways you basically reduce taxes is that you increase your tax net, and if you can generate more revenue by reducing taxes, then if you can substantially,
then it makes sense.
Then it makes sense. Now, what we basically did here was that we just willy-nilly went and reduced taxes with no plan whatsoever, and that made a severe dent in our revenues. Effectively, I think close to about 500-600 billion rupees. That's a big gap to fill.
Correct. And I also believe that these tax reductions didn't really have a benefit to the wider majority of the country, because a recent research had shown that more than 50% of the taxes were only being enjoyed by about 20% of the certain people of the community.
Exactly. Now the question is that now the tax net in Sri Lanka is very, very small. I think so if you can widen the amount of people who pay tax, and then based on some statistic you can push tax rates down, provided that you'll be able to increase your rent. That we didn't do. We just basically reduced it on the now we also reduced it, and also COVID, the pandemic, impacted revenues of businesses as well. So you basically had a dip in taxes based on the COVID impact as well. So that hurt us very badly.
Our reserves have been declared as officially down to about $50 million a few weeks ago. We had the Prime Minister saying that even finding $1 million is a challenge now for us. From in a grander scale of things and in the more overall macroeconomic sense, Mr. Wahid, what exactly does this mean and how does it impact? I know we see the results already, but I believe from a more economic viewpoint and from a more investment viewpoint, as per your area of expertise, how exactly do these dwindling reserves affect us in a more macroeconomic scale?
Yeah, because if effectively what your reserves is your accumulation of foreign currency which you have to meet your day-to-day expenses. Now, if you look at now, for example, now when the central bank basically came to the market and said that we are going to stop paying creditors, so at that particular point in time, if the numbers are right, I think reserves were below $5 million. So we had a interest payment of $59 million, which was falling due in a couple of days, and we didn't have the $59 million to pay that interest. So if we had gone ahead without making that announcement and defaulted, which they call it a hard default, because you basically go and on the day interest payments are due, you don't pay them, then basically that's a wrong signal you give the market. So here, rightly, we basically went, and also we lacked a little transparency. Because effectively, every week we basically were publishing our reserves, right, which was in the region of 2 billion, 1.9 billion, 1.8 billion. But the usable reserve component of that, the usable,
much less,
was within $100 million.
Because so even at the time, I believe gold and all that. Am I right?
No. Okay, it's not only gold. Now also we had a swap agreement with the government of China. Sri Lanka had a swap agreement, $1.5 billion. Now that $1.5 billion was not available for use. It was an asset. It was basically which the government couldn't use. So effectively, that didn't serve the purpose of fulfilling the requirements of the country, because it's still a number in there.
Yeah. It's not cash available at hand.
It's effectively an illiquid asset which is sitting in the balance sheet of the.
It's more like a facility that is available.
It's not even a facility. I mean, if it is a facility, you can draw down on that facility.
Correct.
Now, this is just an asset which is basically sitting there in your balance sheet.
Stay tuned. We will be back after this short break. This is Bisnomics. Welcome back to Bisnomics, your weekend's most profitable 60 minutes. We are in conversation with Mr. Ifthikar Wahid on the current economic crisis and the impact of it on the business sector. Mr. Ifthikar, now let's talk about the increase of interest rates. We saw that the central bank decided to raise the interest rates. Of course, at the recent policy meeting, they have decided to keep it at the same rate without any increases. But we did see an unprecedented rise of the interest rates. What are your thoughts on that? Was it a too harsh or a too sharp rise that we saw all of a sudden? Or is it a case of what I mentioned earlier, that rubber ball being kept under the water with a special force, and no sooner you take the hand out, the ball pops up? And most importantly, what will be the impact of this on the business sector moving on?
The sharp increase was the right move, because the reason is that we had been holding on to the interest rate. Now, like I said 2 years ago, if we had let market forces allowed the market forces by free float in the exchange rate and also keeping the interest rate, then the market would have basically adjusted, the interest rates would have got adjusted over a period of time.
Not a sudden
change. So here, the reason is that you had to push interest rates up because inflation was running riot. I mean, basically, even today, it's whether whatever the rate we are fixed, whether it is the right rate, is questionable.
And the Hanks index is showing that we are only second to Zimbabwe in our inflation.
Exactly. So the question is that you had to increase interest rates, and I don't know, maybe going forward, it may go further up as well. You might have to because now we are just getting into a position where we have no reserves, even foreign exchange, even meet basic essential needs. So it's going to be a stressful situation. And yes, it will impact businesses because your cost of borrowing is going to go up. And businesses will have to, like, now the other now coming back to the earlier question, when you have stress, there is pain. I mean, when there is stress, there is pain. Now, this pain basically has to be shared by everybody.
Correct.
The government has to share a little bit of pain. The people have to share a little bit of pain. The business community has to share a little bit of pain. So it has to basically it has to be spread out across. So what we actually try to do is that we try to protect different groups. So finally, the impact basically comes down to the man on the street, where he feels all the pain.
Correct.
Right. So if it was spread out, everybody would have felt pain, but we would actually been in a better position to face the situation.
Understood.
Than right now.
If you look at some of the leasing companies, for example, they are saying that the vehicle leasing rates are going at more than 25%, 30%. Mr. Wahid, do you think that whoever bought vehicles a few years ago would probably be one of the last generations to be buying a vehicle for a foreseeable future?
Yes, I mean it's going to be very tough, and also the issue here is that we have just got out of a moratorium. So a lot of people who had leased vehicles had not been paying as well. So I mean that doesn't mean that what you owe to the leasing company was frozen. That was basically accumulating as well. And now you now that the moratorium is over, all of them will have to come and start paying that money, and that money they'll have to pay based on the current new interest rates which are going to go. It's going to be very, very tough.
Understood.
Yeah, and it's going to be very stressful on the balance sheets of the finance companies as well.
So what kind of other challenges should these finance companies be ready to brace themselves for?
I mean, there is going to be a lot of stress.
Because there is a talk that even some of the banks might be having issues, and the banking system can collapse.
Banks do have a serious issue because banks also have. Now, we had 2 years. We have 2 years of people not paying their liability because of the moratorium.
But still, banks showed some decent profitability.
No. That's the other issue. Now, what the mistake we again made back then is that the moratorium was the right thing. At that particular point in time, people couldn't pay, so you give them a moratorium. Usually, when you give moratoriums for a very short period of time, right, so that you can come up with a mechanism to pull the banking industry as well as the borrowers out of the. So here, what we did was we just continued to extend the moratorium, and now going forward, there is going to be a lot of stress in the balance sheets of the banks as well. Understood. Because asset quality is pretty bad.
Professor Hank's index shows that our inflation is even above Lebanon, and in terms of our inflation, Mr. Wahid, we are even worse than some of the countries like Ukraine, which is actually facing an attack from Russia as we speak now. And how do you feel? Now, we know how bad inflation is. We see the cost of basically everything has gone up. Milk powder has not only has the cost gone up, they are not even available for purchasing. Butter is now, you are looking at something paying more than 1,000. They say we might be the last generation to be eating butter for some time as well. And I mean, this is the harsh truth. Yeah. And everything you can imagine has gone up. My question is, the fundamentals of economics clearly say that inflation, high inflation, and one might even say we are very close to a point of hyperinflation, is going to have a dampening effect on exports, and that it puts our exports in a spot of bother, or it makes our exports uncompetitive. How do you see this rising inflation affecting the exports of Sri Lanka?
Okay, now this is for example, now you have effectively what happens is that when there is inflation and exporters, input costs basically start increasing. So that's the reason why you basically let your currency also on free float, because your currency basically will if you
set off.
effect the currency depreciation, I mean,
Yes.
will basically set off. So effectively, the exporter will get more dollars, I mean,
rupees.
more rupees for the dollars.
Correct.
Now, if you freeze the rate,
Correct.
then what he gets the limited amount. Within that, he has to meet the cost.
The rising cost.
The rising cost. That's an issue for the exporter because you have to give the exporter value for whatever he is exporting. Only then that he also can be competitive outside in the market because his input costs are going to be definitely be expensive.
Understood. And in terms of the inflation, are we at the tip of the iceberg, or is this how bad it can get? What are your thoughts?
Now the question is that we are facing this for the first time.
Correct.
Right? So we don't know what's actually in store, right? The only way you can look at stuff is that basically what has happened outside, compare it and say, okay, this will happen. Right now, we have a serious issue because we have a serious issue is that we haven't still initiated discussions with the bondholders to even restructure our debts. So we still don't know where we are.
Or what we are going to do.
Currently we are still in limbo because we haven't still got a plan, a sustainable plan, which will basically take us out of this.
And I believe that some of our debt partners like China has expressed displeasure at going to the IMF as well.
No, but the question is that, I mean, China is just a bilateral relationship, but here you have to basically deal with the whole world. So yeah, you have to, you can't. Based on a bilateral relationship, you can't put the country at risk.
Correct. And as an investment bank, I want to ask you now, yes, we heard about all the gloom and doom of this defaulting on the bond payments and not paying for the international sovereign bonds. But at the same time, we saw some of the other global investment banks like, for example, JP Morgan coming and saying, no, we are placing our faith in Sri Lanka's recovery. What does that exactly mean?
No, that's a punt that they're taking. And the question is that it doesn't mean, unlike a corporate, where you go bankrupt, you close the business and go home.
The country can't do that.
The country can't do that. That's what I said. I didn't want to use the term bankrupt because we are currently insolvent and we will come out of it. At some point, when will you come out is the question.
Correct.
Whether
it's a
it
matter of
5 years, 10 years, or 7 years, whatever the time. So if you don't structure your transition to get out of this problem in a structured manner, in a sustainable manner, then it will take time. So that's, and talking to the IMF, if we had started, like I said, if we had started talking to the IMF 2 years ago, we would have had a plan in place, we would have started working towards that, and we would have been getting out of it. So now we have just initiated discussion. So it's a tough, it's a long grind.
Understood. The IMF, since we are on the topic, Mr. Wahid, now Sri Lanka has gone to the IMF, there are discussions in place. So how exactly, I mean, for the understanding of the average citizen, I would like you to explain, how does the IMF come in? Do they give us a loan? Do they tell the rest of the world this is how they will be paying back? How exactly do you see the IMF coming in? With what support? Number one. Number two, they'll also have their demands. You can't just take money from them or support from them and not and do what you want. They'll have demands. After all, IMF was originally founded way back to make sure that countries are not fixing their exchange rate. But today it's playing more of a support role for countries in debt. How do you see the IMF support coming in, number one? Number two, what will be their demands as per your experience?
Okay. Now, right now, to some segment, IMF is a dirty word. Now, if you step back and try to compare IMF, now, if you take, for example, the financial system, you have the banks, you have the finance company, and you have the central bank. Effectively, the central bank effectively is your lender of last resort because if you are stressed,
bank to the bankers.
If you are stressed, you go to the central bank. Now, if you take the IMF, Sri Lanka is also a stakeholder of IMF. I think it's 196 or 198 countries. And I think the Prime Minister of Sri Lanka, I don't know with the new change, Mahinda Rajapaksa was the governor of IMF. Every head of state sits on the board of governors of IMF. So it is not a private institution or a organization. It's an organization of all countries. Every country, when they are stressed, they go to the IMF. Yes, IMF will put conditions because they are not going to write a check and give you and say you can do whatever you want.
There are no blank checks.
No, nobody gives you a blank check, right? Now, for example, if a finance company goes bust and goes to the central bank,
They'll have conditions, yes.
central bank will say, okay, these are the things you will have to do. This is what we will give you this amount, but these are the things you will have to do. So, and that's not a bad thing as well. But at least that will bring in some discipline
Correct.
into the administration of the country.
And some assurance that this is on the right track.
Exactly.
Understood. What about the state-owned enterprises of Sri Lanka? What do we need to do to make sure that their economic contribution is also being maximized? Let's talk about that on the other side of this short break. This is Bisnomics. Welcome back to Bisnomics. We are in conversation with Mr. Ifthikar Wahid on the current economic situation of the Sri Lankan economy and what needs to be done to really get out of this mess. Mr. Wahid, let's talk about state-owned enterprises. Lots of talk about it, especially with the IMF talk coming in. There were concerns that IMF will ask the SOEs to be restructured, that there will be layoffs. There were concerns. And it's an open secret, or a public secret rather, that most state-owned enterprises, unfortunately, are massively loss-making in Sri Lanka. Now, but I believe, and compared to a country like Singapore, where the state-owned enterprises are doing quite well, this is a stark contrast. Now, what kind of a burden do the state-owned enterprises have on the budget of the country, and how do you see this problem being solved in the long run?
Okay. I am a firm believer that governments should not run businesses. The governments don't have expertise to run businesses. Now, if a state-owned enterprise is profitable, keeping it going, profitable in the sense efficiently profitable, then you can keep it going. Now, if you take the state-owned enterprises in Sri Lanka, they are all basically draining the coffers of the government. Now, a good example is basically now that the fuel thing is in this. Now I think about a month ago, Lanka IOC announced their earnings.
Yeah, extremely profitable.
Extremely profitable, and we have Sipetco, which is doing the same thing. They are basically buying oil from the same international market. They're getting it into Sri Lanka the same way, and they're selling it to the same market. Now, if one institution can be profitable and the other is basically bleeding,
it boils down to governance, isn't it?
There is a serious question.
Correct.
There's a serious question because effectively this is not efficiently managed. Now, to manage an institution efficiently, one important ingredient is you have to have skin in the game. The sense that if I have put money into a business, I will stand on my head to make sure that business makes money up. Now, if I have to go and sit and manage a business which the state is funding with no accountability,
no skin in the game.
Now, that is the reason why our state-owned enterprises have got to this level of this. So, yes, state-owned, and yes, the IMF will want state-owned enterprises to be reformed, restructured, or even divested. So, and it's actually a good thing because the problem, effectively supporting a state-owned enterprise that is bleeding, right, is effectively you're basically wasting people's money.
Correct.
So,
but every time we see that when they try to privatize a state-owned enterprise or get an external investor, we see the problem that there are protests. In fact, I personally see, I don't know whether you'll agree with me on this, every time that there is an effort for a foreign direct investment, the talk of the town is, oh, they are selling the country, they are selling the assets. And even if you look at one good example, if you take railway, there were so many private sector players who were offering railway services, luxury tourist coaches, etc. But even those we saw over a time period due to pressure from the state entities, they had to shut down. Am I wrong in this?
No. Okay. Now this question always comes up. Now, if you step back, right, to the early 90s, I believe, the telecom sector also was state-owned, monopoly. We somehow managed to divest telecom. Today, you and I have smartphones, have 3-4 numbers, we can communicate efficiently, is because telecom was privatized. That doesn't mean that somebody had taken telecom and gone away. I mean, the benefit of that privatization is enjoyed by every citizen of this country. And the same thing will happen, for example, if you privatize any state-owned enterprise, the service that will offer, the benefit will be enjoyed by the citizens of this country.
Because the simple principles of competition will come into play,
Exactly.
demand and supply.
Exactly.
And people stand to get a better service at a lower price because of the competition.
Exactly.
Now, Mr. Ifthikar, in terms of the stock market, which we've seen, yes, the last few days with some level of political stability coming into the picture, we saw the stock market picking up, but we have seen the market going from one of the best performing in Asia or even in the world to one of the worst performers. How do you see this volatility playing out?
No, this was not a surprise. Now, example is that now people who put money into the stock market are basically effectively are looking at return on investment. Now, just before interest rates got pushed up, and if you go back a year, interest rate, the low LKR interest rate was 4%, 3%, 4%. That's what people were getting for their deposits. And the stock market was basically providing you a higher return. So there was a lot of money going into the stock market. And borrowing costs were also cheap. So people were basically leveraging themselves and going and investing in the stock market. Now, with the interest rates going up, the expected return on investment on the stock market, if it was maybe 12% or 15% a year ago, which basically would have been about 11% above the risk-free rate, which is the government securities were giving you 3-4%, and you get a 12% return. You have basically got a good return. But today, government securities pay you 20+%. So anybody going into the stock market will expect a return in excess of 25-30%.
Absolutely.
Yeah. Now the stocks that are in the market are basically valued based on a discount rate. Now, the discount rate used 12 months ago and the discount rate used now, there's a big difference. So effectively, it's going to push prices down.
Correct.
So markets are going to stay down a little, and the cost of borrowing also is very high. So effectively, your cost of leveraging yourself to invest in the stock market is not conducive right now.
On a final note, now we spoke about government policy. What about business owners? What kind of policy decisions do you think business owners should be making during these tough times?
It's going to be a very tough time for the businesses as well. The same stress the governments are facing, the businesses will have to face. This is the time to basically step back, introduce efficiencies, and ride the stressful situation and try and get out as come out of the problem, because it's going to be stressful for the businesses as well, because there are lots of things that are happening. Now, if you take businesses in Sri Lanka, we have high imports than exports. So effectively, we
That's a fundamental problem.
It's a fundamental problem. So import costs are going to go up, and lot of business right now. There are a lot of businesses which have gone out of business because they have no ways of importing their products into the country. So they are effectively switching on to other. So it will fall into place. That's the reason why we require a structured plan to get out of these problems. We have to have a plan where we will. I mean, I think the policy makers will have to sit and come up with a plan, right? Which is a 5-year plan, which basically is stress tested, addressing instead of trying to address issues in isolation, addressing all the problems that are there. Because effectively, we are living in an interconnected world, and everything what you do is linked to something else. So you have to have a structured plan to get out of the problem we are in.
Mr. Ifthikar Wahid, it was an absolute pleasure hosting you today in Bisnomics. We discussed a range of topics from general economics to business policies, and most importantly, your take on things was very interesting, and you were very in a balanced way, focusing on the short term, medium term, and the long term aspects as well. Thank you so much for joining us, and wish you good luck with all your future endeavors.
Thank you, Tadir. Good to have been with you. Thank you.
And no matter what industry you may be in, a knowledge about economics, a knowledge about what's happening in the global business landscape and in the Sri Lankan context will help you to make smart decisions. There's going to be a time period of pain, but if you make the well-planned right decisions, you will be able to ride this rough patch and emerge on the other side a winner. And that's our wish for you in the coming week and the months, days, years ahead for your business. I'm Taradhu Amrasekara, and I will see you with the next episode. This is Bisnomics.